Hello and welcome to Dialogue. I'm Zhou in Beijing. Recent remarks by glass tycoon Cao Dewang about his U.S. plan have sparked a discussion that China is not only losing its manufacturing sector to Southeast Asian nations, but perhaps also to the developed economies like the U.S., especially in the context of the new U.S. economic policy under incoming President Donald Trump and the volatile state of European affairs. Well, China will face fresh challenges and probably competition in terms of currency, finance, and investment in the future. And the circumstances make the public doubt the strength of China's economy. However, is China really losing its confidence in economic growth? How can China retain domestic private entrepreneurs while still attracting overseas investments? In order to revive economic confidence, what changes should China make? And to talk about all these and more, I'm pleased to be joined in the studio by the head of China Program Global Policy Institute, Miguel Geraci, and University of International Business and Economics Professor Liu Baocheng. But before we begin, let's take a look at this.
Overall taxation for manufacturers in China is 35% higher than that in the US. The remark by Cao Dewang, founder and chairman of a leading auto glass maker in China, has been widely circulated on social media recently, causing heated discussions about China's present investment environment.
Private investment growth is still much lower than GDP growth. It's lower than investment by SOEs, by the public sector, and it's also lower than investment in unproductive housing.
Many key sectors, such as investment and industrial production, seem to have bottomed out in September, but then picked up speed since. However, economists say pressures remain and it's too early to tell if the worst is over.
It is only reached the bottom. It not means we're going up.
Analysts say the Chinese government implemented policy moves to spur growth this year, including construction spending and tax credits, but it may take time for the effects to finally trickle down to private players.
We have seen major support from policy fronts, including fiscal policies. The implementation is faster and the amount is higher than before. We should keep on watching whether the fiscal revenues could pump into the real economy, whether government initiatives could drive private sectors into infrastructure building. Markets are watching over the effectiveness of the policies and its drive on private investment.
In the just concluded annual Central Economic Work Conference, leaders promised to further promote supply-side reform in 2017, while also pushing state sector and fiscal reform, in the hope of boosting investors' confidence, both from home and abroad.
And to talk about investment, finance, and China's economy, let's turn to our studio guest. Let me start with you, Mr. Liu. It seems that a lot of people worry that Chinese capitals are being flowing overseas. Some of them are into real estate and assets, some into manufacturing and industry. What do you make of this?
I think there are two major drivers for this. For the business side, they have a strong urge to globalize their business. And if you look at the Fortune 500 companies, China takes more than 1/5 of them in number. So they are sizable enough to be able to go for really global investment. It's not only doing FOB trade. So that's the eternal drive. And the other would be the Chinese government is pushing forward not only along the Belt and Road, but also for a global expansion. And it's not only there to sell the product or to have the low-end manufacturing, but really to acquire technology, to acquire brands, and now to set up sizable operation. So the overseas to take advantage is the local resources, and more also to penetrate what is allegedly as the anti-dumping measures, and also to make it close to the market.
But because of the size of the economy and the investment, the rest of the world must feel the impact from Chinese investors.
Yes, of course, because if you compare the size of China economy, quite soon to be the first economy in the world, clearly there cannot be any room anywhere in the world to allocate all the investment that China has. Of course, there are some areas we always refer to Europe, the US, as the most, let's say, promising market, but we also have investment of China, we know, in Africa and South America. The Silk Road, I'm not maybe particularly optimistic because it's big land masses with very low population. And the Silk Road was good 1,000 years ago, where you needed to stop every 20 kilometers when you go by horse, and so it was fine to have few people, and in every cities to stop. But now, if you want to do fast train, high-speed trains, so you can go for 2,000-3,000 kilometers without seeing too many people around. So it's not clear what the market there would be. It's probably, I see the Silk Road not just as the road, but as the destination.
Let's talk about investment. As we just mentioned in the opening, Cao Dewang is a very famous entrepreneur. When he talked to the media, he said the cost in the U.S., such as land, electricity, logistics, and even human resources are going down. So that's why he chose to invest in America rather than in China. But China used to boast a manufacturing powerhouse.
That's true, but that was maybe the story of the 80s, of the 90s, and then the problem with China is that as the economy develops, wages go up. Now, in the last few years, average wages have grown a lot faster than in the rest of the world. Today, the average city worker makes about 60,000 renminbi per year, so that's quite a lot. There was some reports that measured the relative cost, overall cost of manufacturing in China versus cost in the United States, and I think China ranks at about 95% of the cost of the United States, US being 100. So basically the cost saving to come to China is only 5%, and we don't even talk about efficiency, training. There's another problem with China. The people mobility is very, very high. The average factory worker, I see this all around China, they move from one factory to another one just for one extra renminbi. So you have a very high turnover, learning curve, people do not learn fast, and so the entrepreneur in the next 2 months, like every year for Chuanjie, for New Year's Eve, Chinese New Year, will have to replace 30% of its workforce.
Does it mean, Mr. Liu, that we're losing manufacturing on two fronts? Low end to Southeast Asian nations and high end to advanced economies like the US and Europe?
Yes, there is a tendency that we are moving more towards the upper stream, the higher end to the Europe and North America, and we are also losing the low-end manufacturing, particularly the contract manufacturing, to more of the South Asia, like Vietnam, Laos, and even Myanmar, etc. But that's not as really scary as people might say, because if you read the most recent survey by the U.S.-China Chamber of Commerce, which says that the confidence is waning for foreign investors here in China, but pessimism is not there yet. And the top worry for foreign investors in China is still the uncertainty of the policy. So it is not really the rising labor cost that presents the major stumbling block, because they say, okay, the government produce a lot of grand goals, but they do not really see whether they are consistently implemented. So that's something that business is really about. So business is not really a worry about a cost.
What particular policy area are we referring to? If a foreign investor wants to invest here in China, what are the top concerns for him?
So number one is that transparency. So you do not really have a lot of red tapes hidden in the drawer. Therefore, they really have they are able to calculate what would be the risk and what would be the cost. So uncertainty is very different to risk. So risk can be measured and can be ironed out, but uncertainty is really sending a trail, particularly for big multinationals, because they really need to report to the upper level decision makers, what would be the assessment for the possible risk. But uncertainty is not measurable. So number two is that whether we have the equal level playing field between SOEs and foreign companies and state-owned, for those private firms, etc. So that's something that is not very clear. And also, tax scheme. So for example, in the United States, you have 2 levels of tax for VAT, but in China, you have 4 of them. But application of different categories pretty much depend on the free discretion of the local tax collectors. So that really creates a lot of ambiguity.
But Miguel, these things that Mr. Liu mentioned, level playing field, transparency, and taxing, those problems have been here for decades. Why those foreign enterprises and big transnational companies worry about right net
the new thing, you know, like you said, 20 years we had, in fact, transparency has improved over time. So if anything, we would have had more investment coming into China. The reason why investment now starts to be weak in China is because the policy is renminbi is now depreciating. So I remember when I first came to China 10 years ago, it was almost a one-way bet. Renminbi could always go up. Now these things have reversed, and now the fear and the belief in Wall Street is that the renminbi can only go down. And it is only there because the government supports it. So now if you're a foreign investor, you have two roads. Do you invest to produce and sell back to the US, let's say the Foxconn iPad model, or do you come here to sell to Chinese consumers? Now, if you sell to Chinese consumers, which is the new trend, of course, with the renminbi going down, you're going to bring back lower dollars, number one. Number two, we also, you know, despite the fact that the renminbi seems to be going in the internationalization, capital account is actually being closed. We have new restriction for 2 weeks ago for amounts larger than X. And so people are also afraid that the money that they would be making in China is not easily then re-exported out. And so China needs to make clear not just the rules of operation, but the rules of capital. And finance is, in a way, things that we in the West are used to have completely open.
So how much of the currency value fit into this picture about investment? Because many people, just as Miguel said, worry about whether renminbi will go up or go down.
So as a matter of fact, the continued depreciation of the local currency really discourages the foreign investment. Actually, encourages export, though. You know, overseas investment. I mean, so it is not really a major driver, but it's really there to you know, for capital flight. So that's more to look for safe haven. Not really for a direct investment or greenfield operation, though. So I think now I really have a more positive note towards Taiwan's phenomenon, because they need to go for global marketplace. Like here, they also go to Italy to have the air conditioners made and then, you know, to be sold in China. So they're also there to help to inject more value into their branding process. And of course, you know, for them to have a higher technology content and closer to the market would be more of the consideration.
Have we come to a turning point where China has changed from a producer into consumer, so that the picture of China's economy has changed?
It's really more globalized, both in the manufacture side and more of the consumption side. You know, while Taiwan is making such a claim, actually, Boeing has declared to have the assembly plant located in Shanghai, and Microsoft is engaging into joint venture with China. So now it's really, you know, we are able to rival with the global big giants in creating a global map. So this is not really to run away, because the major operation for Taiwan is still here in China, and also he is spreading more into Italy and many other European countries. Okay, so that's why I do not really see that the attractiveness for China as the environment is now losing strength. And also, if you look at the past 10 months of foreign direct investment into China, that's 4.7% increase. So that's not really bad given the whole world sluggish economy.
Let's also talk about some external factors, like President-elect Donald Trump. He said he won't cut taxes for U.S. companies or those who are manufacturing products in U.S. He will also boost infrastructure investment, and probably the Fed will further rise its interest rate. Will those factors change people's mentality about investing?
Yes, very big impact, because, for example, the new Trumponomics is almost a copy and paste of what China has been doing in the infrastructure. The paradox is now that the infrastructure in China...
Like what we did just 5 years ago was a stimulus.
Exactly. So China, and just the physical infrastructure, you know, China has the best railway network in the world, transport, logistics, and that's the paradox. The US does not have. I always say, when you arrive at JFK Airport, you think you are in another country that I will not mention here, but it doesn't look like the first economy in the world. So Trump is now saying, we have to make infrastructure the best in the world. Now, there's only one country that has the money, the resources, the power, and the know-how, and the will, and the need to export maybe the overcapacity in steel and other raw materials. And so for China, if it plays well, it is a blessing. That's why when I said before the Silk Road, let's put it aside. If China can play the reconstruction of the United States physical infrastructure, roads, bridges, railways, that would be a great boost.
But are there risks also involved? Because we understand that Donald Trump probably tends to be more protectionist in terms of trade, but will he become also protectionist in terms of investment?
Well, I really doubt whether Trump is able to realize this sort of grand goals he promised to the American nation, because Obama promised the same, reindustrialization, rebalance, whatsoever, but little has been seen. And number one, when people are shifting more into the jobs for easier money, they don't go back to the manufacturing side. So now, if you go to Carolina, are there people who are willing to do the furniture anymore? They used to have a very strong advantage to doing furniture. If you go to Cleveland, do they want to do the steel making anymore? No. So it is really a human tendency that they do not really want to go back to those what is quote unquote dirty jobs. So that's number one. Number two is that there are so many resistance, and there the unions, socially disadvantaged people. They are really a strong disrupting force.
What about infrastructure? Miguel mentioned. Well, should that be an opportunity for Chinese, because we have know-how and capital to do that?
Well, I think it's more opportunity for the U.S. people.
But will the U.S. accept that? Because it might be a political problem too.
We are doing now the subway in Boston, and but we failed with repairing the bridge in San Francisco. But of course, whenever there are infrastructure development opportunities in every corner of the world, so China will be able to have a good chance. But that doesn't mean that China necessarily will really obtain this opportunity. That's given also, yes, there is a strong isolation and protectionism proposed by Donald Trump.
Because the idea of Chinese building roads and bridges in America do not sell in America.
It depends, because the problem that we need to solve is that when country A wants to do M&A in country B, there's always this problem. You mentioned Italy, I'm Italian, and so it's always what you want to buy is not what people want to sell. So it was fine when Suning bought Milan football team. It doesn't matter. It's not strategic. I mean, it's strategic, but it doesn't matter who the shareholder is. Pirelli was acquired by Chem China. Fine, they make tires. When Huawei wants to purchase, high-tech equipment, manufacturing, telecom, it gets a little bit tricky. Now, if a Chinese company goes and build roads, not owns, build, that's fine. Level one. If they own a minority stake in a motorway, that is fine. If they own a minority stake in a high-tech, sensitive, like aerospace, then it gets a bit tricky. But the lucky thing for China is that China, yes, they would like to buy know-how that the US, of course, will never sell. But China can go little by little, do the minority, provide the resources. China, level zero. China just sells steel to the US. There's no strategic issue. The steel is steel. Cement is cement, takes the overcapacity and ship to the US. No US person would say, oh no, we want to pay more for the steel. So there's no competition. It's actually a double win for both. But again, it must be played well.
All right. But we'll come back to our discussions about our domestic economy later on in the show. You're now watching Dialogue here on CCTV News. Don't go away. We'll be right back. Let's talk about China's economy. The Central Authority has just concluded a meeting annually about how to plan next year's economy. There are several issues coming on top of it, supply side reform, which is a buzzword, and also problems that we might raise, financial stability and housing bubbles. What do you think is the top concern for Chinese economy at the moment?
I think the top concern is stabilize the financial system. We in the West have experience of crisis. Southeast Asia has crisis, Japan had. China needs to be very, very careful. So China needs to, in a way, tone down the narrative on internationalizing the market, opening up Shanghai Stock Exchange, liberalizing the banking sector, liberalizing interest rates, liberalizing the exchange rate. I say
because we're going too far, too fast?
Yes, I say none to any of these things. It took us hundreds of years to do it. And it's a one-way road. Once you liberalize it, you don't go back.
What do you worry? Why we should slow
I worry
down?
the interest rates in China are very, very low. I know they're higher than the US, but interest rates should be at the level of GDP. So when GDP grows by 6%, 7%, interest rate should be 7%, not 1.75. That gap is bubble. And interest rate, if they were liberalized
So you
in
think
China,
there is too much liquidity and there is financial
yes, because money supply grows faster than GDP. Grows 11, 14%, and GDP grows at 6%, half the rate. So every year, an extra dollar of money goes into half of the return. And so that's the problem. If we were to liberalize interest rate in China, half of the company would go bankrupt immediately because the cost of money would go up.
Is that also your concern? Of course, we understand housing bubble has a lot to do with financial stability.
Yeah, I think that is one of the top concerns by the central government. The quantitative easing was really got out of hand. So particularly in the last 1 year, and that's why we wanted to have, say, a more prudent monetary policy. So and you see that the inflation rate, by official statistics, is on the rise, but actually we feel that the inflation is getting even higher.
And when the U.S. entering into a time of interest rate hike, should we follow suit, do as the U.S. central bank has been doing? Is that the right time?
So now the world financial arena is full of chaos. Despite of the G20, there is no coordinated action. So the Europe is still doing the QE. But China, in order to shoulder the downward pressure, we have to support enough liquidity. But the issue is how to manage those liquidity to be funneled into the real economy. So instead of supporting a money game, so that's something that we need to be very concerned about.
It seems that the supply side reform that we've been talking about a lot are aimed at these questions. But the problem is all those measures, destocking, deleveraging, and structural reform will lead to economic slowdown, which is something we don't want.
But the money market is a self-making one. So we have to be careful about the liquidity and how they are really managed to and where they are going to. So too much of the money game is being purported by this sort of liquidity or quantitative easing. So that's not really helping the economy. But as for the supply side, yes, there are big structural problems, but those structural problems are intertwined with the institutional problems. How to address the SOEs merely by a merger and acquisition, big plus big, and make it a bigger one, that doesn't really help. And also the traditional leverage of shifting the debt into equity position, someone is going to pay the bill because it is money losing. So even if
are we now kicking the can down the road?
So I do not think that we are moving in the what is considered to be the most appropriate direction. Simply by reducing the number of SOEs, that doesn't really help. So the third one is really how to further identify the property rights. So which the government is seriously doing, because only if people are identified with their rights, and also when particularly for the land reform, when the rights are really able to be transferred and to be marketized, so they are able to invigorate the Chinese economy.
Miguel, obviously the Chinese government has been making a fine, delicate balance act. How do you think they've been doing, and what they should keep in mind when they're doing those balancing acts?
When we advise, we have to always make sure that we understand what is the goal. Is the goal to make the economy grow, or is the goal to make the economy balanced?
The problem is we want to do it both.
You can't. It's impossible. It's
we want to maintain stability, but also economic growth that is acceptable.
No, it's like the blanket. Either you cover your face or you cover your feet. One place will be cold.
In China, we have a proverb: you cannot
try to do both.
You cannot burn the candle on both ends.
Exactly. And so, when we have monetary policy loose that tries to make investment, make the economy grow, fine for the economic growth, but then bad for the rebalancing because it pushes investment, and we don't want investment. We want consumption. So,
what do you think is the priority?
I think
which is more important, because
the
economic growth can mean stability, can have political ramifications?
I think the way is to focus on lowering the economic growth and changing the narrative. So there should be a campaign that explains to people, we are in Beijing, money is not now the most important thing, but cleaning up the environment is better. So GDP, instead of growing at 7%, now we'll make it grow at 3%, but the air will be clean. The rivers, water will be clean. You can actually drink, you can actually eat. And you know what? We are at a level of income in China, middle income, that people would be happy to accept to pay a little bit of money in exchange for health. And so you could do both.
You think we have more tolerance?
Absolutely. 20 years ago, you couldn't tell people wait 10 years because people were hungry. Now, luckily, reduction of poverty has been very successful. There are still people that are poor, but we can subsidize those. But the general proportion of the society can prioritize
if
health
structural
to money.
reform should come first, what structure you're particularly looking at?
I'm sorry, you mean which type of...
Which kind of a structural reform that you think is the most important, that should come first?
Focus on green economy and renewable energies, closed coal, even if it costs more, it doesn't matter. It's already... We have to move out of manufacturing. If we move to renewable energy away from coal, yes, the cost of production will increase.
We're already doing that. Is that just the pace problem? We're not doing good enough and fast enough?
Well, without really institutional reform, I do not think we can really succeed in the structural reform. So look at Chinese textile industry, electronic industry. They had overcapacity, but the government doesn't really need to do much because they are able to digest through the market force and through the global market force. So now, for the cars, for the steel, for the coal, for the cement, leave more to the market. So I think that can be easier job for the government to do because the excessive capacity for those big manufacturers by us LCOEs, they are the makings of the government planning. So if you do it through destock it through the planning again, do you know where is the right point, the right equilibrium? So that's a very important issue. So of course, for green economy, for strategic moves, so every country is looking at it, but whether we are ready for it.
But
so
the
that's
central government
we
has to have the political capital to push those reforms, even if there is blowback from local governments and interest groups. You think it is the right time?
Yeah, so right now, if you look at the many Chinese companies who got listed on NASDAQ, they now pull back. So actually, NASDAQ is supposed to support the innovation and the new economy, but why do they pull back from the United States? Because in China, the money game is more lucrative than supporting real industry. So how really we can really engineer on that? So that's, and look at also the Chinese Chinex. So they are there, they have a lot of more companies, but they are not there to be able to finance more to support innovation.
Very briefly, we're running out of time. What is your sense of China's economy going forward in a 1 year, 5 years framework?
Well, a declining target, 6.5%, I think will be revised down a little bit, just massaged a little bit, not a big change. But I also think that hopefully this outbound investment will actually be beneficial for the Chinese economy, for diversification and for better return. Because all the problems that China would have, they could be hedged out by looking at overseas investment. So unless it's capital outflow because people want to take money out, but if it's good investment, I support going out.
Okay, what is your forecast?
I think it's going to be more resilient to changes. Even it's the government engineered one. We are most of the companies are not really responding very well. And for the private sectors, whether they are going to answer to the call of the government to participate into the state-owned ones. So we are there to see. So I think the mixed economy is a good structure, but we need the right tools to encourage the reality to be really fulfilled.
All right. On that note, we end this edition of Dialogue. Thank you very much, Miguel, and thank you, Mr. Liu. You've been watching Dialogue here on CCTV News. Thanks for joining us. Goodbye for now.